is June 3rd. June 3rd. Happy summer. Happy summer. Um, let's see here. I brought up, you're looking at the SPOO chart. This is the 24-hour Globex session. Just going to give you a sense of where we're at. You can see in here for our high on Friday, closed it right around that 53.06. Well, that was the high print. And we really kind of stayed in this really consolidated 52.95 to 52, 53.12, 13 range. So real tight range. With a move like that, I still was just thinking about it all damn weekend. It was kind of caught me off guard. To that point, actually, one thing I want to address. If you are not, I had 2 days where I was up really early and it just really wasn't, and by default, just not all there. It's really so important for you as a trader to just acknowledge that about how you're feeling yourself, because you're definitely not going to see things right. You could be overreading into a situation that it's not necessary, and your best bet is just to stay away. And if I'd replay on Friday, I simply would have I really just would have stayed away, because after about 9 a.m., I could just feel I was just not on. And if you miss trades, you miss trades. Um, as evidence, I just was not seeing the trade that well. So what I'm going to do right here is I'm going to put SPX right there. There's SPX. If you were only looking at the futures, there's no way that you could possibly see the level that we kind of bounced off of. There was just no way. It would have been impossible. So what I'm going to show you, I'm going to bring this up. I'm going to increase the size here. So now if you're looking at, so we're looking at, oh, geez, damn drawing thing. Now we're looking at SPX. You can see this consolidation all in here. But before we got all the way down here, you could see all this consolidation. So we got in, I think we tried along here and we all got stopped out, and it proceeded to come back down here. But then if you went and looked at NDX, it is clear as a bell that this break of this level, and once we had this gap filled, there really was no support until you got down in this area here. And it was that 18,200 area. That was, for me, after I went back and looked at it again on Saturday, that's where the true correlation was. And then I started to hone on these areas and look at where SPX had traded down into those areas. And it was basically the 52, the 51, 91, 95 area. That's where it correlated. And the spread was trading at around 14, and that gave you an ES of about 52.0506. And that was the right, all those prices were all correlating. And that's what I normally do, but I wasn't functioning, and I had no business being in the doggone market. So I was kind of ticked off of how I managed the trade. So I guess the lesson, the moral of the story is, if you know yourself, if you're not feeling on, step away from the computer, go do something else. You just got to move on. So I'm expecting what I'm seeing here with the SPX. ES is up around 13. That puts the SPX right at 52.90 area, which brings it right in here. So we will have a bit of a small gap up. It'll bring it right in there. We'll have a small gap up. There's probably a good chance it'll want to come down and close this gap and probably consolidate in this range. If we get below the 52.78, 79 area, 77 in SPX, that's when I'll probably want to come back and consolidate here. So it's really just going to be a level by level day. It's as simple as it always is, level by level only. With that, I'm going to quickly just throw it over to Dan.
And looking at your chart there too, it looks like that's going to close one of those gaps from, if we open here, it's going to close and maybe we'll get to 90, I don't know where that is, 95-ish. But it looks like we're going to close a gap. What day was that? Last Wednesday. So that's an area that we are possibly going to close. And so briefly, I'll touch on Friday. So Friday, I have sort of, I want to do this actually. Put these right next to each other here. So ES and SPX. So I actually had a level down here at on ES at marked at 13, which correlated up in the 52.13 area on SPX. You saw that we traded below that. I tried to get long here and stopped out. I stopped out on both calls and stopped out on futures. So normally the setup here is where you take it off this level, you think you're going to play off this level, and you blow through it. It looked like we were going to we did get below this 5,200, which theoretically should have been sort of a waterfall. What was very interesting was you had SPY, and I'll switch SPX to SPY here. And I was only looking at SPY because it had a tremendous amount of options. It was a quarterly options expiration. And it was that options expiration was this 520 area. So I think it was at 680 or almost, yeah, I think it's $650 million of negative gamma sitting at SPY 520. So technically below SPY 520, it should have sent us spiraling downwards. And that's sort of where I was actually thinking we were going to be doing and what I thought we were going to be doing. When I realized that we sort of had this support here, we came back, we got back over 520, which now knowing that it's negative gamma at 520 and it's 600 and something million dollars, the closest SPX was, I don't know, a quarter size of that. So that's just a massive sizing. And what I mean there's 670 something or 650 million of 520 puts or negative stuff at 520. So we get over 520, all those puts are essentially starting to disintegrate. And as this is 1 p.m., I think we got back through it. Yeah, just about 1 p.m. we got back through it. And now we're 2 hours to the close with these puts rapidly decaying. And I knew if we sort of could get back through this area, those puts were going to absolutely evaporate. And they did. And that was the trade here. And then we had sort of that gamma squeeze on those 520 puts sent us up into this area here, back to that sort of area that we were in early in the morning there in the overnight hours. And once we got through that, the rebalance sort of took over because those MSCI rebalances have been very bullish over the last couple of years, and people front ran them. So there was just buying into it, which sort of exaggerated that gamma squeeze that happened because of the 520 and then the 521. And something, a little tool I've been playing with from, we'll have some announcements on this in the next sort of week or so, but I've been playing with this tool here, and it shows me sort of where the options liquidity is. And you could see where all that negative liquidity is. This is these boxes are showing where there's negative and positive liquidity. So all that negative liquidity was down here. We got back through it, and there's nothing. It's just an illiquid pocket where when we got through it going down earlier in the day, it shredded right through it because there's very little in this area from SPY 520 all the way up to 524-ish. So as soon as it got through it, from looking back at these charts of sort of these liquidity pockets, we move through these areas of illiquidity very fast. And so it was almost a perfect storm scenario for just a crazy squeeze. And that's what we got. So looking at today, and I'll post a screenshot of this later today when we get an updated sort of area showing the liquidity. But today, I think there's a very good chance that we get up to SPX sort of 5,300 area. I'm looking for a big retracement. And the reason I'm looking for a big retracement is Friday's move was nothing more than mechanics and nothing more than a mechanical reflex off of options areas. And with a quarterly expiration with massive volumes. And I think that if you look at this sort of area here, and I'm going to adjust this, just look how little volume there is in this area. Because we move through it so swiftly. We move through it so swiftly on the way down. We move through it so swiftly on the way up. I think we need to come back in here and auction this area. I'm going to adjust sort of probably a little bit higher, sort of like right about here-ish, the bottom of this wick. We can even, because that wick, we can go back up to this channel. But I think that the chance that we come back under 98 and down to this sort of 70, ES 72, 71, we got to auction this area first. And actually, let's adjust it this way so it's easier to see. You got that box there. And then you got that box there, and they sort of overlap. So first we have to auction this one, and then I think we need to auction this one, and then we'll see if we continue up, whatever it is. But that's my lean for today, is that my gut tells me that when you get these mechanical moves, don't really look at it as there was bullish buying or bearish selling if it went the other way. It's more of a reflex off of a quarterly expiration that had just massive volume. So that's going to be my gut, is that we come back down and trade this area. And like David said, I do think that there's a good chance that it's like sort of a level to level trade, and there'll be some opportunities. And seeing that gap close on SPX, which is up in here, so 52.95, that could be an interesting area if we open around there too. So I'm still short from last night. I took half off 10 points. I'm got a little padding to let this trade develop, but I think that we probably come back down and trade at least down to the 52.73 area on ES. I think that just, to me, that just sort of makes sense.
And that spread expanded to about 17 at the close on Friday.
So it's 17 now? Okay.
Yeah.
Yeah, so that's and I don't, that might come back at the open. That's interesting to see. That might come back because the price was moving so fast.
Exactly, that's my thought. I'm thinking that will compress get down to about 14ish.
Yeah, I think that would make sense. And you see those spreads change up a little bit when you get those really fast moves. I mean, that's sort of unheard of right there. That's let's see what I think. Let's go to, I think I had a 30-minute candle on it. Yeah, 30-minute candle went from 52.31 to 50 something points here at the end of the day, from 3:30 to 4 o'clock. So that's a wild candle. So
that was just bizarre to even stare at on Saturday morning.
Yeah, that's a wild candle, but it was nothing more than mechanics at work. And today gets back to normalcy, and we have a big area, and almost look at it as a gap up. And that's sort of the way that I'm treating this, as a gap up. It's not because we closed up here, but that's how I'm gonna treat it and trade it, like there's a huge gap below. That's the best way I can explain it, is I'm gonna trade it like there's a gap below. That's all.
All right. Good morning. I'll just go very quickly. On the index side from Friday, within the bearish nature of this pattern, we came down and we tapped almost this 50 Fibonacci. And we had this 50-day moving average down here too. So that's sort of on the technical level. Some areas that we hit, and now we're coming up and we're sort of right at this 10-day moving average now.
Hey, Lee, turn the volume up.
Is that better?
Much.
Okay.
Excellent. Thank you, sir.
So yeah, so Friday we came down, we tapped this 50 Fibonacci off of this retracement here. And then I shared last night sort of this cup and handle pattern here. We have broken this trend line. We'll see if it holds. I measured the Fibonacci retracement from this high to this low, and this gives us some targets on the upside. Measured move off of a cup and handle, typically that would put us up around the 56.38 area, which lines up with a 261.8. So that's sort of a possibility. Obviously not today, but just off of this whole setup here. So we could be, on a technical basis, headed up towards that level, around 5,600. Immediate levels that I have watching today, obviously this overnight low over here, which kind of lines up with a 23 retracement. And then this is a 61 retracement here. So I've got these two Fibonacci levels are kind of key today. 53.06, 52.91, 50 on the low side. Overnight high is here at 1350, 1325 area. And then, as Dan mentioned and David mentioned, we have this potential gap fill here in SPX on the upside, which if the spread's, around 14, 15?
It went to 17, but we're going to have to see where it opens.
Yeah, I mean, I have it at around 53.20 right now, but obviously we have the 5300 as well. So that's kind of what I'm watching. Just seeing what the market's going to do. If we break down below this 91.50, then like Dan said, we're going to auction this area and sort of fill that in a little bit. We do have a daily pivot, mid pivot here around 52.69.50. So we'll see if that comes into play today. But for now, we just seem to be, in sort of this range here is sort of expected, I would say. And if we break outside of that, that's where we sort of start to see some trend moves. On the individual stocks, still long Tesla from 173 area. We scaled out at the 187. We scaled some more out around 180. And we're just waiting to see. There's not really anything actionable other than playing this range, but it's getting pretty tight. And the longer thesis, as you know, is this sort of inverse setup here. So we're hoping we get this breakout over 187 and this gets trucking. End phase, I've been long. It's kind of been chopping around this breakout here. We got to get over 133, 140 area, and then we can come and start filling these gaps in here. There was, I think, a Goldman report, maybe an analyst upgrade overnight. I have to double check that. HEMS is still looking pretty healthy. Obviously, GameStop is going to be a lot of eyes on that today. So we'll just see how it plays. NVIDIA, I think, was coming up to all-time highs again.
GameStop actually has a gap above 40 that could go up to 50-ish, I guess.
Yeah, potentially. Well, it's got a gap. It's already filled this gap. I mean, we'll see how it acts, but yeah, if it gets over this 42.50 area, it could definitely get some more momentum. But we'll see. There's going to be a lot of eyes on that today for sure. That's pretty much all I had today. Let's see how things shape up. Oh, I was looking at CRM. This has a nice gap, 200-day ahead. That might be something to keep an eye on to see if this wants to come and close at least up to the 200-day. So there's 20 points in that and another 15 up to the gap close. So we'll see how that does. That's pretty much it. Have a good day, and we'll be in the room.